Hello, right, so I did a video potentially a year ago, maybe longer, and I tried to explain how to accumulate coins without risking lots of money. And before going any further, I'll introduce a true story of a friend of mine. I don't know the exact details, but I know the amount, and I know that he lost all his life savings to cryptocurrency. And he works in the financial services. Strangely enough, a lot of people working in financial services have the least amount of knowledge about money. They live in a cloud, but there's some great people who work in that industry, and I've worked in it myself. So what this person did is they had £40,000 and they heard Bitcoin was going to $1 million, and they bought a load of Bitcoin. And they bought this Bitcoin, and instead of the price going up, it dropped by 25%. Then it dropped some more. And when it dropped really low, they sold it all. And they probably reduced their original principal to about £10,000. And then what happens is Bitcoin starts going up a lot, and so they buy some more. And you can imagine if it drops again, what they're going to do. They're going to sell it again and panic. And within a few rounds, they've lost all their money. And that is incredibly stupid, absolutely insane. And so my goal was, despite making like a lot of mistakes early on when I got into cryptocurrency, my goal was to reduce my fiat amount, to get back the cash that I put in, and to effectively grow more coins and turn that into an income eventually. And we know full well that the taxman is going to start trying to find the ways to get this money out of us, and so unfortunately we're going to take this on the chin. Of course, who knows, maybe we're going to move to some country where they don't care about taxes on cryptocurrency and the world's going to change completely. So there's always that possibility that good, sound, hard money will be the way of the day, and that governments with their fiat-based Ponzi schemes will be a thing of the past. So we never know how it's going to work out. And what you'll see on this screen here is my application which I've built to analyse data, and in particular analysing time series price data. So this is written partially for my property platform that I'm soon to be relaunching, and also for my new cryptocurrency platform which I'm launching hopefully March, April time. And these applications all run off the same web data platform that I've built, which I've also just relaunched as a product. And so if you want to know more about that, you can contact me and find out more. And this is online, so you can search and read up about it. But I want to focus on trading strategies, because what's going to happen eventually, I think, is once this new website is launched, I suspect I'm going to do periodic publications on YouTube or other channels to describe market observations in a way that is different to what we find from our traditional crypto YouTubers, and doesn't maybe create the kind of FOMO, panic buying, panic selling that we see a lot of the time. Because what we always see is some great crypto YouTubers who make a lot of money, and I've learned a lot from them, but they're often getting calls wrong. They don't know either, but they just make calculated risk-based probability trades for buys and sells and shorting, etc. And they can also be wrong, and all they're really trying to do is to maximise their gains and minimise their losses. And if you're not an experienced trader, what you will do is you'll listen to them and you'll follow what they say, not realising they've probably got some kind of hedging strategy to minimise their risk, because they're trying to sell cryptocurrency, the image, the projection of it, and if you're not so experienced in trading, you're going to not make the money that these guys do. And so my strategy, which I'm going to go through, I'm going to go through my original strategy, and then I'm going to explain how to minimise those losses in a bear market and to actually make coins when the market is falling. This is a critical time to make money when you think that it's the time not to make money. So, first of all, Bitcoin. It's been dropping quite a lot. Other coins have been dropping quite a lot more. Some not so much. I'm sure we'll see a few 24s there. So some have lost a quarter of their value. Some of them quite well-known coins as well. So it doesn't look good, does it? And if we go here, this is Bitcoin. So since August, it's gone from 40,000. It's peaked at $67,000, and it's gone down back to $40,000. And people will argue that's going to fall through now and it's going to go even lower. And at the same time, my kind of observation is with these types of things is that when it does a kind of a loop and it closes that circle, it's probably bottomed out. That's just my opinion, but remember, I'm not a day trader. I just trade based upon limits and levels to accumulate coins over time. So let's go through my actual strategy. So, where are we now? The market is falling, embrace it. So my goals, none of this is financial advice, remember. My goal is keeping in coins, remembering that selling at a loss wipes out taxable gains. That is a good thing to do. Okay? Your goal is to accumulate more coins, and also don't buy the dip with cash too early. So you'll see my limit order strategy shortly, but my goal is to still have some cash that I've made in the past to buy coins when they're probably at their lower, to then potentially sell them again at a higher price, to then get more coins and keep doing this. So these concepts in these next slides are going to be a bit alien to some of you, but if you can just pause this video and just like look at the screenshots and maybe get out a spreadsheet and make some notes, you'll learn all this, and over time you'll be able to effectively gain more coins. Now, there's no promise that the values will return to what they have been. There's no promise or guarantee at all. We don't know this. So it's always more important to not put too much cash in. That's absolutely my goal. So, this is how the average Joe comes into cryptocurrency. They say, oh, Bitcoin's going up a lot. I don't want to put too much money in. I'll put in £100, and they see a coin and they buy 10 coins. And I say to them, don't do that. Take that £10 and maybe buy 3 coins and buy different amounts of those coins. So in this situation, I'd buy £9.50 worth of a coin, and £9 worth of a coin, £9.10's worth, potentially £8 worth. Now, what will happen is, of course, people say, well, look, but the prices of Bitcoin or that coin is £10. So how can I buy it when it's actually at £9.50 or £9? Well, what will happen is, over time, almost certainly, is the coin will drop below the current value. It might be in a month's time, a week's time, a year's time. But at some point, that coin is going to go below the level of £10, and it's definitely going to go down below £9, potentially £8, maybe £7, and potentially it might go to £5. So it's a time preference. How long will it take for it to drop down, and what can you do about it? And so I typically set levels at 5%, 10% either way, and then over time those trades execute. This is known as a limit order, and when those limit orders fill or execute, you then have some coins, and you can then sell those coins at 10% of the premium. So then basically you're getting a small profit, and then you can effectively set a buy again at a lower price, and then hopefully accumulate more coins. And over time you will accumulate more coins. It will take maybe months, at least many months, if not many years, but over time you will get more coins. And so this is basically my strategy, and it works particularly well during a rising market. Okay, because even during a rising market you'll find this kind of thing here, and so if you catch the right percentage gains and losses, you should end up with more coins. Now, it's not perfect, but it's pretty good. So I've got a chart here, may be a bit hard to understand, but this kind of shows how this strategy works. So initially we have lots of coins, the amount is quite high, the value is quite high because we've got lots of them, and then what happens is maybe the fiat price goes higher, so we sell some coins and we have more value, and then over time the fiat price goes higher, we've got more cash and we've got less coins. That's kind of like one cycle, and then of course what can happen is this cycle can happen again, and then we've got more cash to buy more coins, and that's an iterative approach to trading. So I've said our main objective here, use low amounts of cash to acquire more coins, to sell these coins once the price is higher. So here we go, more coins at lower value, we want more coins to sell at a higher price, Once you have more cash after selling, buy coins at a lower value. Next slide. This shows what I call the time horizon of cash versus coins. So price of coins, we end up with less coins, okay, but if we repeat this, we're going to end up with more coins and more cash. That's basically the strategy. And from reviewing what Simon Dixon says, is what his strategy is to accumulate more coins and then to be able to loan out some of those coins to then get an income from the loans. And that should end up with him getting those coins back, but equally accumulating interest on those coins. And that is effectively his strategy, and it seems a pretty good one, doesn't it? Now, this is an important chart. This is Cardano. So Cardano is a coin. It's got a pretty high market cap. What's that? 39 billion, and it's pretty well known. Look, right now it's dropped 60% from its all-time high. So it's still probably got some more to go down, but it's actually gained 6,000% since its all-time low. And I'm going to go to this slide here. Hope it's going to open. Right, look at this. You see this little, this is Bitcoin versus Cardano. And just recently we saw that Cardano went on this big rise, and I knew for certain it was going to collapse back down again. When you see this kind of hockey sticking, it's always going to pull back, and that's exactly what it did. And I'm going to take you through my strategy, and you'll see how this can gain you more coins. So, what can we do in a collapsing market? Just some general questions. Sell at a loss, panic. Hold on for dear life and pray. Wait for more, put more cash in because we think the market has bottomed. Try to risk a small amount of our coins to acquire more. That's the one we have to do. We risk some of our current stake to acquire more, and we hope that in the future these prices will return or revert to mean, and we can then sell some of those to get more coins and potentially more cash. That is my goal. The other thing that I would say that I do is I do hodl a certain amount of coins and I forget about them. Yeah. In fact, I think probably right now maybe 80% of my coins are not on an exchange, maybe more. But that 20% that I keep rolling, I keep trying to get more coins. So this one may be hard to follow, but I'm just going to try and explain it in simple terms. The values are figurative, they're probably not correct, but let's just go through this, okay? So sorry about the messy, schooly writing. I try to do this quite quickly, so sorry about that. So imagine we have 10 Cardano, 3 Litecoin, 3 Solana. Imagine that the price of this is 0.01 ETH, so that means for 1 Cardano you get 0.01 Ether. So here you'd end up with 0.1 Ether. Litecoin is a value of 0.1 ETH, and Solana is 0.1 ETH. Now, what are we saying here? At some point, most coins will gain 10% on Ether. Set a limit order to sell coins at 10 to 15% gain on ETH. Once they execute, set a limit order to buy back the coin when the ETH is 10 to 15% above the price of the coin. So what does that mean in normal speak? What this means is that just like we saw that chart of Cardano versus, or ADAR versus Bitcoin, where it's going down like this and then suddenly it does this, it means that most coins at some point during the fall in the market are going to spike against Bitcoin, and they're going to spike against Ether. And then what's going to happen is at a certain point Ether and Bitcoin are going to rally slightly, and they're going to basically claw back those losses, and you're going to be able to buy back the original coins for more coins. So if you, for example, saw that Bitcoin was at 15% below ADAR, just buy it. Just basically buy some or sell some ADAR for Bitcoin, yeah. And then what you do, you set a limit order to sell ADAR at 15% above. And what is almost undoubtedly going to happen is you're going to be able to gain 20 to 30% more coins. Now, we don't know at all that basically ADAR is going to go up again to its all-time high, or even go high ever again. We don't know that with certainty, but we suspect that it will. And so what will happen in the future is, by doing this a few times, you can rapidly increase your amount of coins, and although the fiat value will be quite low, when the market starts to go up again, you're going to see much higher fiat value of those coins in the future. So that effectively is my strategy. I think it's a very good strategy, and I've already made quite a lot of coins doing this. Okay, so I'm going to leave it there and say goodbye. Take care.